Hello and welcome for this market update, being October the 28th. We wanted to review just a few of the major indices, take a look at the euro and a few of the precious metals, and kind of get an idea of where this market may be going or kind of what it's doing. The chart that I have up right now is the SPY, which is the ETF that tracks the S&P 500. First, what I want to go ahead and do is I want to copy this bottom trend line here, which basically connects these two pivot points. And what we're going to do is we're going to create a channel. And so we're going to take there. And for those that are familiar with technical analysis, this is a pretty common technique. Is you just basically find the lower trend line, you copy it, and you paste it to some of these prior peaks. Oftentimes markets will begin to terminate at this upper trend line. And as you notice, there's been some pretty choppy trade here since, well, really the 13th. We had a small little gap up here, and it's continued to really struggle to reach some new highs. In fact, this high was a down day actually, which is kind of helps to build the bearish case. One thing I like to look at is, what I like to apply a trend regression channel here. And what this does is it measures the mean, or the average price action of this whole leg here, and then it separates it out by 2 standard deviations. So I want to see, how are prices trading within the range. One area of interest that I'm looking at particularly is, you see this low right here, or this low close. This is going to provide, or should provide, some support. And what I mean by support is prices may come down, test this level again. If prices hold here, then we can, say with some pretty good confidence that we can see a continued high. However, one thing I want to look at is this MACD indicator, which is basically measures the difference between two moving averages. Here I set it at 1664.9, which is much longer than what it's traditionally set at. But it tends to pick up some long-term moves in the market. But as you can see here, these two moving averages are starting to come together, which gives an indication that there may be a reversal. One of the other things I'm kind of looking at is, this is a momentum indicator. So it basically just evaluates or applies some math to how easily prices are moving. And you can see that starting from this period here upward, that you had, momentum wasn't necessarily following with it. So that's something that we also want to take a look at. Let's go and move to the diamonds, or DIA. And we're going to just apply some very similar techniques here. All right. Again, you see it's flirting with this upper trend line. And if we look at the MACD again, we're looking at a really close crossover. Again, we have some negative divergence here. So what do you do with this information? Depending on how long or committed you are to this market, tightening up your stops if you are long this market may not be a bad idea. If we do see a price reversal, we're looking at prices, we're tracing down to its 50-day moving average, which is 106.92, and all the way down to its 200-day moving average, which is 105.32. More than likely, the first area of support will be this 108.45 if this market does correct down. Now, again, drawing a trend regression channel like we did with SPY, here we see that we actually had prices breaking. So prices traded below its 2 standard deviations of its mean. And an area of interest, like I pointed out on the S&P, is 109.80. Between 109.80 and call it 109.15. So stay attentive to this. Take a look at it. We can anticipate some market correction, and in fact, if this market were to extend higher, a healthy pullback wouldn't be too bad. If it does pull back, the things that we're looking for So we're looking for it to pull back on lighter volume. All right. So the last thing we want is high volume with a very during a pullback, especially if there's a lot of volatility. Now we're going to look at the Russell ETF IWM, and here again I went ahead and drew the trend regression channel for us already. And this area here between 69.57 roughly and call it $69 is going to should hopefully provide some level of support. Okay, let's go and look at the euro. We could look at the dollar index. Of course, most of the dollar index is, is basically a basket of using the dollar against a basket of currencies. Here we see the same kind of thing, right? So we have upper resistance. There's our lower support. For those folks who are familiar with Elliott wave theory, this is very much an ABC wave, far from a motive wave. So, and what I mean by that is that it's more corrective in nature than anything else. So again, we want to keep an eye out on the dollar relationship to other major currencies. You can check the dollar to the yen, which the yen's obviously been making some progress against it. Swiss franc, the Canadian dollar. All of these things are pretty important. I like to use the euro. It's simple, it's easy. I don't have to look at a lot of other currencies. Let's go and look at some of the popular metal trades right now, being gold and silver. Again, we're seeing a slight pullback in gold. Now, where is it pulling back to? This is what we want to use our extension tool. Excuse me, our retracement tool. And this most recent move has pulled back about 25% of this entire move. I'll go ahead and show that to you. There we go. And essentially, if this is 0 and this is 100, this thing is pulled back just 25%, which is healthy. You'd expect to see this type of retracement, and again, 38% providing the next level of support. If prices hold here or even here, and there's a likely chance it would, it would make sense that it would head all the way down to its 50-day moving average, just because we see a lot of support here between the 38% retracement, 50-day moving average. We potentially could see the markets moving higher, or gold moving higher in the short term. Again, something that we want to keep an eye on. A few traders that I know are actually straddling this position, which means that you buy a call and a put, and they're betting really that the metals markets will experience increased volatility here over the next few weeks. Silver, very similar story to silver, with the exception that you see how steep this price movement has been. For some technicians, this is very alarming. This is a little too fast, too soon. In cases like this, what you typically will see is either prices will retrace fairly deeply, and again I'll draw those retracement lines for you again, or if it doesn't retrace steeply, what may typically happen is prices will trade flat until they find some type of support. But again, here 2407 is your upper resistance, 2255 is your upper support. We just happen to be pretty much right in the middle of each of this price action. Let's go and look at the Qs, which is a popular ETF to trade. And again, the Qs have outperformed really all the other indices. And what we want to see is, when is it going to take a bit of a break, right? Because it's really been on a tear here lately. You see some consolidation here, right? Some great price appreciation. If we look at the MACD indicator again, right? Not as as much. It's not closing in quite as quickly or as evidently as the S&P and the Dow, again, it looks like market leadership is coming from the tech sector. Well, that's a wrap. We'll have more videos to come. If you have any particular stocks that you want to evaluate, I'd be happy to take a look at them for you and actually have them on the videos. This is the first of hopefully many, so I'm sure it was a little rough, and I appreciate you bearing with me through it. I look forward to talking to you guys and producing more videos, and happy trading.